Hello everyone and welcome to TTT Markets. I am Fotis Papatheophanos and today I want to talk about something important and slightly uncomfortable. Passing a prop firm challenge does not automatically make you a good trader. Now, before anyone misunderstands this, passing is an achievement. It takes discipline, it takes control, but it does not prove long-term trading success. And in this video, I will explain exactly why, using real examples, risk math, and chart logic. Let's start with the psychology. When someone passes a challenge, there's a strong emotional reward. You say, I made it, I proved I can trade, I'm different now. But here's the problem. A prop challenge tests performance over a very short window, usually 8%, 10%, sometimes even less. That is not long-term trading. That is short-term target achievement under constraints. And those are two different skill sets. Now let's look at this practically, and I'm going to open a Euro-USD chart. So let's take a look at this. Let's look at this practically, as I said. Imagine you caught a trend right here. Let me zoom out a little bit. So here is the Euro-USD chart. Let's look a little bit back in history. Let's say you caught all this trend. You have 2 or 3 strong directional trades. You had good reward risk. You made maybe 3% per move or even more. You could realistically pass a challenge inside one trending cycle. So you catch this move, you make 3-4% per trade, good reward risk, and you pass the challenge. But now allow me to zoom out. In fact, let me do this. I will zoom out considerably so you can see this. I will zoom out considerably so you can see this, and I will choose a weekly time frame. What do you see? Do you notice something? The market doesn't always trend like this. You have choppy ranges like this period you see here. You have false breakouts. You have regime shifts. You have volatility contractions. Passing during a favorable condition does not prove adaptability across regimes. In simple English, it doesn't mean that you can trade every single environment because you passed the challenge. That's what real traders must handle. A challenge can be passed because the market was clearly trending, either to the downside or the upside. Volatility was elevated and gave you a good reward risk. New cycle aligned with your bias, or maybe the risk appetite favored your style. But good trading is not about one regime. It's about surviving multiple regimes. Professional trading requires performance in trends. It requires survival in ranges, as you can see here, adaptation in low volatility whenever it happens, and discipline in high volatility. Passing once proves performance in one window. It does not prove robustness. Now, here is something most people don't talk about. Many traders pass by slightly increasing risk. But let's be honest. Let's say you have 1% per trade. And let me go back to the daily chart. So you have 1% risk per trade. You go for a 2-to-1 reward risk. You make 2 good trades, and then momentum builds. And then it accelerates slightly, and it works. But here is the issue. Acceleration works during a short evaluation period. So let's say you have 1% per risk. You go for a 2-to-1, and you see momentum is accelerating. It favors your style, your bias, and it works. But it is only inside this window. You passed the challenge, you think that's it, I made it, But when momentum collapses, when you move here, when you get funded, the moment you get funded, there's no momentum. So over 6 to 12 months, variance appears. That means you will start having a drawdown. And higher variance plus elevated size equals instability. What do I mean? You raise risk to improve, to hit a target, or to correct a previous drawdown. And from moving to your favored condition, but you have a momentum goes away, volatility drops. So the regime is changing and conditions are different. It means your performance is different. You go for a bigger reward risk, you increase your size, but it's not favorable anymore. And what happens? You get a drawdown. Your variance increases and you have a much bigger drawdown. And there you go. Exactly when you got funded and you thought, now I'm going to make some money, you don't. Let's simplify the math. If you have 45 to 50% win rate, you go for a 2-to-1 reward risk and you risk 0.5% per trade. Over 100 trades, this compounds beautifully. But if you occasionally make the mistake and you say, okay, I'm going to risk 1.5 to 2%, and you allow an emotional spike, and this is going to slightly increase during losing streaks. So you increase your size, so you increase your risk. There is going to be a period where you allow for an emotional spike, and that's what it takes, guys. That's what it takes. The variance now becomes dangerous. So short-term success can hide long-term fragility. Passing doesn't reveal fragility, time does. So this is something to keep in mind. So this is the key difference. Passing tests, can you reach a number under pressure? But good trading tests, can you remain stable when nothing exciting happens? Can you trade small for months? Can you survive boredom? Can you avoid increasing risk after success? Many traders pass, then lose the funded account within weeks. Why? Because their identity shifted. They start thinking, I already proved myself. And that mindset is dangerous. Look at this area. As I said before, it's choppy, we have low momentum, false breaks, and this is where you lose your funded accounts. Not in the big trends, it is the boring ranges, because boredom creates overtrading. Overtrading creates variance. Variance creates rule breaks. A good trader survives this phase. Passing doesn't guarantee that skill. It doesn't mean that you pass the challenge and you have the skill to also succeed during this period. Not at all. So what does a good trader actually do? What does it mean to be a good trader? It means to risk consistently across months, to be emotionally neutral after you win or lose, to reduce even activity when you are not trading very well, to decrease your position without ego when you have to be stable across different regimes, whether it is trending or sideways, you remain stable. A good trader is someone who protects downside aggressively. You survive long flat periods and you compound gradually. I know it is boring, but it works. Think about this. Do you want to evaluate yourself honestly? Then ask this. Would I trade the same way without a target? Would I still use the same size if there was no evaluation deadline? Is my system robust across volatility cycles? Can I trade small for 6 months? Because in real trading, there is no finish line, only survival and compounding. So let's be clear. Passing a prop firm challenge is a milestone, yes, but it's not the final validation. It is a test of short-term execution. Becoming a good trader is about long-term stability. And those are not the same thing. If you understand that difference early, you dramatically increase your chance not just to get funded, but to stay funded. Remember, in trading, passing is a moment. Consistency is a career.